Well, Marathon Digital is increasing its Bitcoin footprint. The crypto miner announcing today that it will buy a data center in Garden City, Texas. Of course, all the while, Bitcoin retreating from its latest record high as global risk appetite wobbles a little bit here heading into the weekend. Joining us now is Fred Thiel. He is CEO of Bitcoin miner Marathon Digital, joining me from sunny Miami. And let's start with that acquisition. Of course, you acquired Applied Digital Corporation's Bitcoin mining data center in Texas. That was a purchase price of about $87 million. And it was interesting to see this happen, Fred, because people have been telling me for over a year now that you're going to see more consolidation in the Bitcoin mining space. Walk us through why you bought this data mining center in particular.
So Marathon started back in really 2017, 2018, using an asset-light strategy where we hosted our miners with third-party operators. That works really well in a bull market and lets you expand very quickly because you don't invest capital in infrastructure, just in your mining capacity. Now that we've reached scale being one of the largest miners in the world, we're very focused on vertically integrating. And so we've gone from late last year owning only about 3% of our total mining capacity relative to the infrastructure. We now own 53% of that. That has a direct impact on our cost to mine, which lowers our break-even point, if you would, on a Bitcoin basis, which is especially important leading into the halving. So we now have 1.1 gigawatts of power that our miners are operating with, of which 53% is ours. So we're looking forward very much to this site. We already had miners running here, so this gives us expansion capacity while lowering our costs. So all great for the shareholders.
Well, Fred, you've been busy because this is your second acquisition in about 4 months or so. Are you looking for more targets at this point, or do you feel set?
Well, I think if you look at the sort of guidelines we gave regarding the amount of mining rigs we had in our order pipeline, whether ordered or optioned, you could basically forecast that we have a need for more capacity. We're kind of reaching that limit now as we speak, but we'll continue to be acquisitive in this space. I think post-halving, there will be some miners whose profitability may be challenged or who may be looking for an exit as their revenues will drop because of the price, the amount of Bitcoin being awarded will drop. And so I think what we'll find is there'll be further consolidation. We're very focused on capacity increases, so that'll come from a mix of buying existing sites like these two acquisitions we've done recently, as well as greenfield sites. We have a team that's very focused on greenfield sites, and then our energy harvesting business is really just getting started, and that's where we're taking biomass and methane from landfills and other places and generating energy with that, mining Bitcoin with that, and then feeding heat back into industrial processes. It's a full virtuous cycle, if you would. So we're very excited about that as well.